Hi everyone, my name is Julius de Kempenaer, the creator of Relative Rotation Graphs here with StockCharts.com. In this video, I'm going to explain to you that RRGs can be used for more universes than just sectors. You may be very familiar with the current RRG that I have on my screen. That is showing you the rotation of the 11 sectors within the S&P 500. Probably the most watched RRG in the world, probably. However, we can take that one step higher because this is a equity universe. This is the stock market. If you want to have a look and get a handle on asset allocation, we've got you covered. If you go to the group dropdown on the RRG page and you choose asset allocation, it'll give you an RRG showing the rotation of various asset classes. And the asset classes that I have on this RRG, so they're predefined, are commodities, treasury bonds. So I've got DJP and also GSG is another commodity ETF. We've got treasury bonds. We've got corporate bonds. We've got high yield bonds. We've got the US dollar as the sort of cash equivalent. We've got Bitcoin as a proxy for cryptocurrencies. And we've got the stock market, SPY. So this will help investors to get a handle on what's happening in the markets from a higher perspective. Basically helping you to answer the question, do I want to move my money from bonds to stocks, from stocks to high yield bonds, from high yield bonds to commodities, or anything in between? And just like an RRG helps you to track the rotation of sectors, an RRG can help you to track the rotation for various asset classes. Again, you can slide through history and you will see that it's not always the same position. What I'd like to do is, because Bitcoin is so volatile and has such strong trends, sometimes I just go into the table and I tick off the tail for Bitcoin. And if I then zoom in and fit the chart, you will get a much better handle of what's going on. And we're at a special day right now that we're recording this. So there's a lot going on in the markets. What you will see here is that SPY was on its way. So the stock market was on its way to the lagging quadrant, and government bonds were moving the other way. So this moving in direction with that is very unusual. Let me center the chart for you and show you that they are mostly using in opposite directions. And I can do that by highlighting SPY and highlighting Gov. Those are stocks and bonds in general. And if I now move through history, you will see exactly what I mean. So you will keep an eye and you can see that those two usually move opposite of each other. And it'll help you to decide whether you want to invest in stocks or in bonds, or overweight stocks or overweight bonds. And this is a good example of where you get a good handle on what's going on. So government bonds are inside improving and rolling over. Stocks are inside weakening and curling back up. And that's usually a pretty good sign that they are embarking on a new up-leg. So stocks are embarking on a new relative up-leg in an already existing relative uptrend, and government bonds are doing the exact opposite. And if I now walk through history, you can see how that works out. In general, as long as one is to the right, that is preferred to one that's on the left. And it doesn't necessarily have to be exactly above or below 100. Just to the right is good, and to the left is bad. Play it out till the end, and you will see that there comes a time where the government bonds are taking over, and it's happening right here. And now we're sort of in limbo with the stock market, but we'll work it out with RRGs in the coming weeks. This is a quick show on how you can use RRGs not only for sector rotation, but also for asset allocation. Go check it out in your own account.